Hello everyone, I'm CA Neeraj B. Welcome to my YouTube channel at the rate Accounting Buddy NB. In today's video, we are diving deep into the secrets of debit and credit rules with 13 practical illustrations that cover every aspect of these essential rules. Yes, you heard that right. This video is all about practical examples to help you master the rules of debit and credit. So grab a seat, relax, and watch the video till the end to become an expert in these rules. Let's get started. Let us practice our understanding with an illustration. Classify the below mentioned accounts into personal, real, and nominal accounts. First account is cash. We know that cash is an asset, therefore, cash is a real account. Second account is drawings. Drawings are the amount withdrawn by the owners for their personal use. Therefore, drawing is a personal account. Third account is capital account. Capital is the amount invested by the owners in the business. Capital of the owners is always kept in a separate account called the owner's capital. Therefore, capital is also a personal account. Fourth account is bank. Bank account is also a personal account. Fifth account is sales. Now sales is a revenue account and all revenue accounts are nominal accounts. Sixth account is salary. Salary is an expense account and we know that all expense accounts are nominal accounts. Seventh account is rent. Rent being an expense is also a nominal account. Eighth account is purchase. Purchase again being an expense account is a nominal account. Ninth account is stock. Stock is an asset and we know that all assets are real accounts. 10th account is outstanding salary. We know that the salary is a nominal account. However, when prefix word outstanding is added to salary, it becomes a personal account. 11th account is plant and machinery. Plant and machinery being an asset is a real account. Now the 12th account is goodwill. We know that goodwill is an intangible asset, therefore it is a real account. Account number 13 is prepaid rent. Since prepaid is added to rent, therefore it becomes prepaid rent, thus it is a personal account. Now account number 14 is electricity expenses. Electricity expenses being an expense of the business is a nominal account. Account number 15 is discount received. Since discount received is an income, therefore it is a nominal account. Let us discuss another illustration. State the nature of the account and show which account will be debited and which account will be credited. Transaction number 1 is rent received. Since rent received is an income, it is a nominal account. And as per nominal account rule, all incomes are credited. Transaction number 2 is goods purchased. Goods purchased is again a nominal account. And as per the rules of nominal account, all expenses are debited. Transaction number 3 is furniture purchased. Furniture is an asset and all assets are real accounts. And the rule of real account is debit what comes in. Transaction number 4 is capital introduced. Capital introduced is kept in a separate owner's account which is called the owner's capital account. Therefore, it is a personal account. And as per the personal accounts rule, credit the giver. Transaction number 5 is salary paid. Salary is an expense account, therefore it is a nominal account. As per the rules of nominal account, all expenses are debited. Transaction number 6 is of prepaid rent. Prepaid rent is a personal account. And the rules of personal account is debit the receiver. Let us discuss another illustration. State the nature of the account and show which account will be debited and which account will be credited under traditional classification of accounts. Transaction T1 is Tuli started business with cash of $50,000. If we analyze this transaction, the two accounts are getting affected are cash account and the capital account. Cash being an asset is a real account and capital is a personal account. Business has received $50,000 cash and the rule for asset account is debit what comes in. Therefore, cash account will be debited with $50,000. Rule for personal account is credit the giver. Therefore, capital account will be credited with $50,000. Transaction T2 is goods worth $8,000 are purchased for cash. The two accounts involved in this transaction are purchase account and cash account. Purchase being an expense is a nominal account and cash being an asset is a real account. Rule for nominal accounts is debit all expenses. Therefore, purchase account will be debited with $8,000. Rule for real account is credit what goes out. Therefore, the cash account will be credited with $8,000. Transaction T3 is goods are sold for $18,000. The two accounts involved in this transaction are cash account and sales account. Cash being an asset is a real account, while the sales being revenue is a nominal account. Rule for real account is debit what comes in. Therefore, cash account will be debited with $18,000. Rule for nominal accounts is credit all incomes. Therefore, sales account will be credited with $18,000. T4 transaction is salary of $4,000 paid in cash. In this transaction, the two accounts which are affected are salary account and cash account. Salary being an expense is a nominal account, while the cash being an asset is a real account. The rule for nominal account is debit all expenses. Therefore, the salary account will be debited with $8,000. Rule for real account is credit what goes out. Therefore, cash account will be credited with $8,000. Transaction T5 is an amount of $2,000 cash is deposited in the bank account. In this transaction, the two accounts involved are cash account and bank account. Cash being an asset is a real account. However, the positive bank balance by nature is an asset. However, under traditional classification of accounts, it is a personal account. The rule for personal account is debit the receiver. Therefore, the bank account will be debited by $2,000. The rule for real account is credit what goes out. Therefore, cash account will be credited with $2,000. Transaction T6 is goods worth $8,000 are sold to Polly. The two accounts affected by this transaction are Polly's account and sales account. Polly's account is a debtor account as the goods are sold to him on credit. Polly is a personal account and sales is a revenue account, therefore it is a nominal account. The rule for personal account is debit the receiver, therefore Polly's account will be debited with $8,000. The rule for nominal accounts is credit all incomes and gains, therefore sales account will be credited with $8,000. Transaction T7 is depreciation of $4,000 is charged on building. The two accounts affected by this transaction are depreciation account and building account. Depreciation being an expense is a nominal account, while the building being an asset is a real account. The rule for nominal account is debit all expenses and losses. Therefore, depreciation account will be debited by $4,000. The rule for real account is credit what goes out. Therefore, the asset account will be credited by $4,000 as the value of the building will be reduced by the amount of depreciation charged, which is $4,000. Let us understand the term account with an example for cash account for the period 1st April 24 to 30th April 24. As we know, cash is an asset of the business and assets when increase are debited and when they are reduced, they are credited. On left hand side of an account, we have four columns, that is date, particulars, journal folio and amount. Left hand side of an account is debit side and is denoted by the two letter word DR. Similarly, on right hand side of an account, we have four similar columns. Right hand side is the credit side and is denoted by the two letter word CR. As a result of a business transaction, if the assets increases, the asset account is debited, and if the assets decreases, the asset account is credited. Therefore, all the business transactions which will increase the cash balance are recorded on the left hand side of the cash account, or in other words are recorded on the debit side of a cash account. Now in the given illustration, we have an opening cash balance of 50,000 and during the month of April 24, business has received cash from sales of goods 75,000, collection from debtors 80,000, commission of 20,000 is received, advance of 15,000 is received from the customer, cash received from the resale of an old vehicle is 40,000 and the capital of 100,000 is contributed by the owner. Now on debit side of the cash account with opening balance of 50,000 and after adding all the cash amounts received during the period of April 24, the total value is 380,000. Now during the month of April 24, the business has paid several business expenses payments as displayed on your screen. Staff salary 80,000, rent 40,000, cash purchases 50,000, payment to creditors 60,000, withdrawal by the owner 20,000, cash deposited into the bank 75,000. All cash outflows are recorded on the credit side of the cash account. Now if total outflow of cash is deducted from the total of 380,000, the business will left with a closing cash balance of 55,000. Let us test our understanding with an illustration. Mention the nature of the account and which side will increase if the transaction is recorded. First account is building. Building is an asset and they are debited when increase. Second account is rent. Rent is an expense account and expense account are debited when they increase. Third account is sales. Sales is a revenue account and the revenue accounts are credited when they increase. Fourth account is creditor. Creditor is a liability account and liability accounts are credited when they increase. Fifth account is proprietor. Proprietor account is a capital account and the capital account are credited when they increase. Sixth account is stock. Stock is an asset account and assets are debited when they increase. Seventh account is interest paid. Interest paid is an expense account. Expense accounts are debited when they increase. Therefore, asset and expense accounts are debited when they increase, while the revenue and the liability and the capital accounts are credited when they increase. Let us further practice debit and credit rules with another example. Basis the modern classification of accounts, analyze the below business transactions, state the nature of accounts, and also state which account will be debited and which account will be credited. Transaction T1 is Tolly started business with cash of $50,000. Now when we analyze T1 transaction, the two accounts which are affected are cash and capital. Cash is an asset account and capital is a capital account. Since the cash being an asset is increasing, cash account will be debited with $50,000 and capital being the amount business owes to the owners will also increasing will be credited by $50,000. T2 transaction is goods worth $18,000 are purchased by cash. If we analyze T2 transaction, the two accounts which are affected are stock account and the cash account. Both stock account and cash account are asset accounts. Since stock being an asset is increasing, therefore it will be debited with $18,000. Now, since the transaction of purchase of goods is settled by cash, the cash balance with the business is decreased, therefore the cash account will be credited. Transaction T3 is goods worth $8,000 are sold to Polly. Now, when we analyze this T3 transaction, the two accounts which are getting affected are Polly's account and sales account. Polly's account is a debtor account as the goods are sold on credit. Now, Polly's debtor account is an asset account while the sales is a revenue account. In this transaction, asset account is increasing. Therefore, Polly's debtor account will be debited with $8,000. Now, in this transaction, sales is also increasing. As per the revenue account rule, sales will be credited with $88,000. Transaction T4 is furniture worth $4,000 purchased from Homebox. Two accounts involved in T4 transaction are furniture account and Homebox creditor account. Furniture is an asset while Homebox is a liability account. Asset value is increasing, therefore as per asset rule, the furniture account will be debited by $4,000. The value of liability is also increasing, therefore as per the liability rule, Homebox creditor account will be credited by $4,000. The transaction T4 is an amount of $10,000 is borrowed by business from Maya. In this T5 transaction, the two accounts affected are cash account and the loan from Maya account. Cash is an asset account while the loan from Maya is a liability account. Asset value is increasing. Therefore, as per asset rule, the cash account will be debited by $10,000. Liability account is also increasing. Therefore, as per liability account rule, the loan from Maya account will be credited with $10,000. Let us understand the concept of balancing of an account with an illustration of a cash account for the period 1st April 24 to 30th April 24. Cash being an asset account will be debited when increase and will be credited when decrease. The left hand side of a account is debit side and is denoted by the letter DR, and the right hand side of the account is credit side and is denoted by the letter CR. Left hand side of the cash account, which is debit side, has an opening balance of 50,000. All the transactions which result into increase in the cash balance are recorded on the left hand side of the cash account. In this example, the transactions which increases the cash of the business are cash sales of goods 75,000, collection from debtors 80,000, commission received 20,000, advance received from the customer 15,000, cash received from the sale of old delivery vehicle 40,000, and the capital contributed by the owner 100,000. And on the right hand side of the cash account, all the cash transactions which results into the decrease in the cash balance are recorded. Staff salary 80,000, office rent 40,000, cash purchases 50,000, payment to creditors 60,000, withdrawal by the owner 20,000, and cash deposited into the bank 75,000. In this cash account example, when from the total cash of 380,000, all the payments of the cash are deducted, we are left with a cash balance of 55,000. Since in this cash account example, credit side is shorter than the debit side, the excess of the total debits of 380,000 minus total credits, the difference amounting to 55,000 shall be entered on the credit side of the cash account by writing by balance carried down with date. This carried down balance of 55,000 is carried forward to the immediate next date, which in this example is 1st of May 24, by writing to balance brought down. Cash account shows a closing balance in hand of 55,000 as on 30th April 23, and it also shows the brought down balance of 55,000 as on 1st of May 24. I sincerely hope we have understood with this example the concept of balancing of an account and the terms balance carried down and the balance brought down and their relevance. Let us discuss another illustration. Prepare a T-shaped account of furniture with the below transactions. Since the furniture is an asset account, we know the rules of debit and credit for asset accounts. Asset accounts are debited when there is an increase in the asset value, and asset accounts are credited when there is a decrease in the asset value. The value of furniture already with the business is worth 50,000. Therefore, it is shown in the furniture account as opening balance as on 1st of April 24. Transaction T1 is on 15th of April 24, 14 tables and 14 chairs are purchased for cash amounting to 20,000. Now with this furniture purchase transaction, value of assets, that is furniture, will increase, and as per asset account rule, this transaction will be recorded on the left hand side, that is the debit side of the furniture account. Transaction 2 is on 30th of April 24, 25 chairs for the conference room are purchased for 75,000. This transaction of 75,000 will also be recorded on the left hand side, that is the debit side of the furniture account. T3 transaction is old chair and tables costing 15,000 were sold on 15th of June 24. With this transaction, the value of the assets, that is the furniture, will decrease by 15,000, and therefore as per asset account rule, this transaction will be recorded on the right hand side, that is the credit side of the furniture account. Transaction T4 is broken furniture worth 2000 was discarded by the business. This transaction will also result into decrease in the value of the asset, that is furniture. Therefore, it will be recorded on the right hand side, that is the credit side of the furniture account. Transaction T5 is an amount of 5,000 is charged as depreciation. The depreciation amount charged will reduce the value of the asset. Therefore, it will be recorded on the right hand side, that is the credit side of the furniture account. Let us now balance the furniture account. The total of left hand side, that is the debit side of the furniture account, is 145,000. Now if we deduct the lesser credit side transactions from the total of debit side transactions of 145,000, we will left with a closing balance of 123,000 as on 30th June 24, and is represented as by balance carried down. Now, when you add all the credit side transactions including the balance carried down, you will get 145,000. Thus, the account is said to be balanced as on 30th June 24. Now, the same amount will be shown as balance brought down on immediate next date, that is 1st of July 24. Let us now try and prepare a creditor account of Mr. Polly by considering the following transactions. A creditor is a liability of the business. Liability by nature have a credit balance. Therefore, in this illustration, the opening balance as on 1st of April 24 in Mr. Polly's account is 12,500. Transaction T1 is business purchased 500 kg of sugar worth 125,000 on credit from Mr. Polly. Now with this transaction, the liability of the business will increase as an amount of 125,000 is payable to Mr. Polly. As per liability account rule, liability account will be credited when liability increases. Therefore, the transaction of 125,000 will be recorded on the left hand side, that is the credit side of Mr. Polly's account. Transaction T2 is on 30th April 24, an amount of 100,000 cash is paid to Mr. Polly against an outstanding payable amount. With this payment of 100,000 to Mr. Polly, the outstanding balance of Mr. Polly will be reduced by 100,000, and thus the liability of the business will also get reduced by 100,000. As per liability account rule, the liability account will be debited when the liability reduces. Therefore, this transaction of 100,000 will be recorded on the right hand side, that is the debit side of Mr. Polly's account. Transaction T3 is on 15th of June 24, 50 kg of sugar was returned to Mr. Polly. The cost of the sugar returned is 12,500. Since the sugar was 12,500 is returned to Mr. Polly, this amount is no more payable to him. Therefore, his outstanding balance will get reduced by 12,500. As per liability account rule, the liability account is debited when they reduces. Thus, Mr. Polly's account will be debited by 12,500. T4 transaction is on 30th June 24. Again, 300 kg of sugar worth 75,000 was purchased. With this transaction, the liability of the business will increase. Therefore, Mr. Polly's account will be credited by 75,000. T5 transaction is a discount of 5,000 is received from Mr. Polly. The amount of discount given by Mr. Polly will reduce the liability of the business. Therefore, Mr. Polly's account will be debited by 5,000. Now, in this creditor account illustration, the credit side of the account is greater than the debit side. The total of credit side of the account comes to 212,500. When the total of the debit side transactions is deducted from the credit side total of 212,500, we will get the balance carried down 95,000 as on 30th June 24. The debit side total will also be 212,500, and thus the account will be balanced. The balance carried down as on 30th June 24 will become the balance brought down as on 1st of July 24. Illustration 10 is classify below mentioned accounts into personal, real and nominal accounts. First is cash. Cash account is a real account. Drawings. Drawings is a personal account. Next is capital. Capital account is again a personal account. Next is bank. Bank account is again a personal account. Sales. Sales being a revenue is a nominal account. Salary. Salary is an expense account, therefore it is a nominal account. Rent. Rent again is an expense, therefore it is a nominal account. Purchase. Purchase is an expense, it is a nominal account. Next is stock account. Stock is an asset, therefore it is a real account. Outstanding salary. Outstanding salary is a personal account, and we know that it is a representative personal account. Next is plant and machinery. Plant and machinery being an asset is a real account. Next is goodwill. Goodwill again is an asset, therefore it is a real account. Next is prepaid rent. Prepaid rent is a representative personal account. Next is electricity expenses. Being an expense, it is a nominal account. Discount received. Discount received is an income, therefore it is again a nominal account. Illustration 11 is classify the below accounts into assets, liabilities, capital, revenue and expenses. First account is plant and machinery. Plant and machinery is an asset account. Next is interest received. It is a revenue account. Next is purchase. It is an expense account. Next is sales, is a revenue account. Next is creditor. Creditor is a liability account. Next is salary. Salary is an expense account. Next is cash. Cash is an asset account. Next is repairs. It is definitely an expense account. Next is rent. Rent is again an expense account. Next is drawings. Drawings is a capital account. Next is depreciation is definitely an expense account. Bank loan is an amount which is due to the bank, therefore it is a liability account. Next is goodwill. Goodwill is an intangible asset of the business. Next is debtors. Debtors are the outside parties from whom the money is to be received by the business. Therefore, it is an asset of the business. Next is discount received is definitely a revenue. Next is capital. Capital is definitely a capital only. Advance income is a liability because it is only the money which has been received but the income has not been earned. Next is carriage outward. Carriage outward is an expense. And the last is accrued income. Accrued income is an asset of the business because the income has been earned but has still not been received. Illustration 12 on your screens is state the nature of the below accounts and on which side of these accounts a transaction recorded will decrease these accounts. The list of accounts is displayed on your screens. Cash is an asset account and it will decrease when it is credited. Bank loan is a liability account. It will decrease when it is debited. Creditor again is a liability and it will decrease when it is debited. Prepaid insurance is an asset account and it will decrease when it is credited. Proprietor's account is a capital account and it will decrease when it is debited. Outstanding rent account is a liability account and it will decrease when it is debited. Plant and machinery is an asset account and it will decrease when it is credited. Debtors again is an asset account and it will decrease when it is credited. Goodwill is a tangible fixed asset and it will decrease when it is credited. Illustration number 13 is prepare proprietor Mr. Rowley's capital account from the below transactions. Transaction T1 is on 1st of April 24, Mr. Rowley started business with 65,000. As per capital account rule, capital account is credited when it increases. Therefore, this entry of 65,000 will be recorded on the credit side of Mr. Rowley's account. Transaction T2 is on 30th of May 24, Mr. Rowley withdrew 10,000 for personal use. Now with this transaction, since the capital will decrease, the amount of 10,000 will be recorded on the left hand side, that is the debit side of Mr. Rowley's account. Transaction T3 is on 15th of June 24, Mr. Rowley further introduced capital of 50,000. This transaction will again increase the capital. Therefore, it will be recorded on the right hand side, that is the credit side of Mr. Rowley's account. Transaction T4 is on 30th June 24, 4,000 is paid as income tax. Since this transaction will reduce the capital, it will be recorded on the left hand side, that is the debit side of Mr. Rowley's account. Transaction T5 is business made a profit of 45,000 for the year. Profit of the business is added to the proprietor's capital. Therefore, it will increase the capital. Thus, the profit of 45,000 will be added to the right hand side, that is the credit side of Mr. Tooley's account. Total of the credit side comes to 160,000. When the total transactions on the debit side are deducted from the total of the credit side of 160,000, we are left with the carried down balance of 146,000, thus making the total on the left hand side also to 160,000. Therefore, the account is said to be balanced. In our next video on 8th February 2025, we will cover what source documents are and why they are essential in the accounting process. We will also guide you through the preparation of vouchers. If you enjoy the content and appreciate my teaching style, please subscribe, share and like my YouTube channel @accountingbuddy_nb. Thank you and goodbye for now.